Okay, welcome everybody to this evening's XAUUSD. My name is Duncan Cooper. So tonight we have forex trading live market analysis coming up in a moment. Just to let you know what's coming up from me this week. Tomorrow I'll be doing trading the 79% fib retracement pattern across different time frames. That's tomorrow's webinar at 8 p.m. Sydney time. And then on Thursday, more analysis. So live forex market review. That'll be on Thursday at 8 p.m. So before we get into tonight's webinar, if you can read through the disclaimer. If you're on the YouTube live stream, I cannot see the chats, but you can more than welcome to join us in the webinar so you can chat to me. Other than that, you can just watch. Everybody, please read through the disclaimer if you're in the webinar. I've got the webinar chat open or the question and answer box open, so you can talk to me in either of those. All right, so we'll just read through the disclaimer. I can see maybe a few new names tonight, so if you're new to the webinars, welcome. All right, so if you're new to the webinars, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor at XAUUSD, and I'm full-time forex trader. I've been trading now for more than 15 years, mentoring for more than 10. My email is there if you want to contact me, duncan.cooper@acy.com. Through the week, you can connect with me on our website, acy.com, go to the Market News tab, or our YouTube channel, XAUUSD Australia. And through the week, you can connect with me personally on Twitter and LinkedIn at those handles. And also to connect, we have our Telegram channel here at XAUUSD. If you would like to get access, just contact Nathan.bray and put his details in the chat. As well, if you want to get access to my chart layouts and templates for MT4 that I use, just contact Nathan. He will help you out. And if you need assistance with a demo account or questions with a live account, just give him a contact. He'll only be too happy to have a chat with you. All right, so let's get into, first of all, the news coming out over the next day or two. All right, I'm just going to refresh this. For some reason, it doesn't look quite right. There we go. Now it's telling me what the next news item is. All right, so we have early in the day had New Zealand CPI QQ, which came in low. So inflation is getting quite under control now in New Zealand. So maybe interest rates may get cut at some point. And New Zealand pairs are definitely under pressure. We've had the Aussie Monetary Policy meeting minutes, which were a little bit hawkish or more positive, maybe still hinting that there could be another interest rate rise. And then we've had the pound average earnings come in slightly worse than expected. Now tonight for the Canadian pairs, we've got the inflation data coming out, so it's going to be very difficult trading those pairs ahead of that data because who knows how the data will come in. And we also have the US core retail sales and retails coming at 10:30 p.m. So those are the risk items coming out at the moment. And for the Aussie pairs, New Zealand pairs, we do have tomorrow the Chinese industrial production year on year. And the big one for the Aussie this week will be the unemployment figures for Aussie on Thursday morning. And for the pound tomorrow, 4 p.m., we have the CPI data. So be aware of that for the pound, okay? And you can go and review what's coming in Friday there, but at the moment, we're nowhere near Friday. We can catch up with that on Thursday's webinar. All right, so for tonight, we do have the Canadian CPI data releases and the US retail sales data coming out. All right, so just as a general statement, we'll go and have a look at the dollar index, but most pairs to the US dollar finished down for the week. Last week, Thursday, Friday, selling off with good inflation figures from the US. And what was a negative week last week for the dollar index? For 3 days of the week, finished positive. I said, you know, when we were down here testing 105.87, this is the weekly chart, doesn't mean to say that we won't finish positive for the week, and we did. So Edwin, hi there. Now, just excuse me one moment. Just want to make sure I'm not having a technical issue. All right, I'm all good. So we had a positive week last week by the end, getting support on our weekly high and actually finishing at the highest point for the last 13 weeks. So the next level to probably anticipate that we're moving towards is 107.67, this weekly resistance level up here. And potentially looking for a higher bottom to form here on the dollar index. Could pull back to 105.87 through the week to get support. But we saw a very positive week last week, so I'm anticipating we'll be putting in maybe another higher bottom to this kind of double bottom here to move up. And S&P 500 here. This is the area I've been watching for price to get into. Hasn't got there yet. So just from a technical area, 62% retracement to the 79% retracement area of, this is a weekly move down. So if you go to your weekly chart, we have a lower top, lower bottom. We're having a corrective move, and I'm just looking to that area for the rally to finish and then turn over. Now, might not get there, but that's the technical area to watch between the 62 and 79% level and that daily resistance up there at 44.60. So we'll wait and see if price can get up into that area. If price was to move up into that area, then maybe the dollar index will just pull down to support this week once more. We'll just have to wait and see how things unfold. All right, let's get into the Euro pairs. Now, last week we failed at 106.35. This is a weekly support area. That was. Pretty much traded to that level and became resistance. Then we traded back down to weekly support. 105.16 down to 104.81. These two lows over here. Now, we're a bit in the middle of the area. We do look at the weekly chart. We had a very nice rejection candle. It'd be nice if we could trade up inside the candle up to the higher end area of the range. Whether or not price action will offer that, we'll have to wait and see. But at the moment, if I drop to the 4-hour chart, high to low last week, I'm just looking up at the 79% level, very close to the daily high that we folks broke last week at 106.16. So anywhere, I think, from 10600 to 106.16 would be a great area to look for the opportunity to sell this week. It would as well fill some form of imbalance that got formed in down through here. And there's some more on that candle, but the one on this candle here may need to get filled, and that would take us all the way back up to retest 106.16. Now, I'm not really looking to trade up, but if you're wanting to trade up, we do have an uptrend here on the 4-hour chart, move to a higher top. And this looks like it's putting some form of intraday bottom in here in the short term. So if you can see set up to buy, I'm anticipating we're moving up to the sell level. So if you're wanting to trade up, I'm having a very positive candle at the moment. And yesterday's range, let's just see where yesterday's range. We're at the 62% retracement down here of yesterday's high to low. So this could be the low of the day. If you can see set up to buy, if you want to trade up, then it's entirely up to you. I'm just going to wait and see if we can come up to the sell zone up here. All right, Euro yen. This is my 4-hour chart. But I've got the day chart. But I'll take my left shoulder head and right shoulder off here. That's my labels. And to the day chart, just focusing on this resistance level here, which could be the left shoulder. We have been failing pretty much at this weekly area over here at 157.99 for the best part of 2 months, but just getting above and keep falling below. And the daily level that I've really been watching has been 44.6 in more recent times, 158.46. Not sure we'll get up there this week, But that's where we've really been holding for about 2 months. And then looking to see if this pattern can form this week. So I'm just watching up here at 158.25. That's the resistance level. 158.22 is a 79% level. So I'm just watching to see if we can come up to that area and form a right shoulder. So we're a bit short at the moment. And I put another line in from my daily chart, which I've had in, but I didn't want to cover too much up when I was showing the pattern. 157.998 is weekly resistance. So we might not get up to the right shoulder of the pattern because we're pretty much holding at that level there. That's a weekly high here. All right, so today we've only been able to get up to about 158, but I'm just watching to see if we can get up to form that pattern this week. Charles, you're saying possible inverted head and shoulders on the euro dollar. What time frame you're looking at? You mean on that 4-hour chart there? Are you looking at this left shoulder here, head, and a possible right shoulder here? Or you're looking at the daily, so you're looking at this as the left shoulder, head. That could be a little right shoulder there. And yep, I mean, there's a number of ways of looking at the euro dollar. I'm just going with, let's go to the day chart. So you're saying this could be left shoulder, head, right shoulder. Well, yeah, most certainly could be. And we could be getting support down here on weekly support. I'm just playing the fade really of, we came up to weekly resistance last week and heavily rejected. And we've been in a 3-month decline here. A stronger force is going to have to come in and change what we've been seeing over the last 3 months. So, I mean, that inverted head and shoulder pattern could be the start of a reversal. Or, what side of the market's going to win out? Is it weekly support here or weekly resistance here? We're going to have to wait and see. So there are 2 ways of looking at this pair. As you're pointing out, we almost got down to 79% level for that right shoulder. And, you could say we have a higher top, higher bottom. So, we could be looking to get long today for that scenario too. I'm just playing the long-term trend play in line with that. But maybe we're getting a long-term reversal. So we'll have to wait and see who wins. So I'm just going to stick with what I'm looking at. And we'll see how it plays out during the week. We'll see what's happening on Thursday. All right, so that's what I'm looking at there. All right, Euro yen. I was just saying, looking at this possible head and shoulder pattern, which is obviously the inverse of what Charles, you're suggesting on the euro dollar. And let's have a look at the euro pound. Now, the fact that we're moving up at the moment, I was looking last week for this to come up to the 79% level. It got a bit short and failed, and then fell down. But we are actually trading up this week. Let's have a look at the weekly chart. We have a higher top. And as we're having a week up now this week, we're potentially putting in a higher bottom here. So I think maybe in the short term, there's still a very major resistance area up here. But short term, this is really maybe starting to at least want to come up and test 8,700. All right. Did reject on Friday, but we're having an outside candle to the upside. Potentially coming up, I think, to test this weekly resistance level up here. All right. For our chart, it's actually at the top of the move at the moment on the 4-hour chart. And being perfectly honest, I don't necessarily like the position of where everything is at the moment on this pair. So I think it was very heavy going up here at 87. We do have the CPI data coming out from the pound tomorrow, which is definitely going to affect the euro pound. So I would just be at the moment a bit on the sidelines on this pair. I'll just be watching to see if price can get up to this level where we've failed last month. And then see what happens up here. Because I'm not yet convinced, because we actually traded on the day chart here, we traded down. Let me draw it in. We've traded down. There's a number of swings in here, but traded down, traded up, traded down here. And whilst there's a few minor swings in here, the major swings are like so. So using the major swings, this could still roll over to put in a lower top here. So I'm not excited about looking at getting long up here. I'd be more inclined to wait to see if we put in a lower top to this top or start to stall here, which could be suggestive of maybe a lower top forming here to that top. Or I would much rather just see what happens on a revisit up here. It's just a little bit ahead, a little bit further up at 87.21. We have monthly resistance up here too. So lots of resistance up here at the top, but not really that fussed about trying to look at an opportunity to get long up there. So I would just be monitoring to see if we stall on that pair at the moment. So back to my 4-hour chart. You can even look at the whole range here and look at that 79% level up here, 86, 84. Up to 87, just see what's happening up there through the course of the week for a turnaround. All right, pound dollar. So again, very common theme is opposite to the dollar index. We had a very nice rejection candle from weekly resistance last week, 2308. So euro dollar and pound dollar, I said watch weekly resistance. Well, it's monthly resistance on the euro dollar, but it's still weekly resistance as well. I said watch those levels for reversal last week. Of course, you had to make the decision maybe to trade at those levels in the face of the US inflation data coming out. But if you did, things all worked out in line with the overall trends from the weekly chart perspectives. So we could be failing here up here at 123.08 to continue the move down to the weekly support levels, 119.15 down to 183 or 118.03, I should say. And I think we've already maybe just traded below last week's low, but again, like I was just suggesting on the euro dollar, I'm going to look to see if this can trade up within last week's range, and can it come up to 122.71, the daily high point that we false broke last week. Now, yes, like on the euro dollar, we could be forming a day chart uptrend to move higher, but you know, euro dollar, pound dollar, both failed at weekly resistance to finish pretty much flat on the weekly low by the end of last week. So if that's suggesting anything, that's maybe suggesting another down week this week. So I'm just looking for a retracement back inside last week's range at a higher level, looking for the opportunity to sell. So I'm just monitoring the range. We've just broken just the lower last week, so I'm dragging the fib down to the lower this week as it currently stands. And I would be looking at the day resistance level at 122.71 and 122.89 for the sell zone this week. All right. Now, as we are in October, I can see last month's low down here as well. If you're more to the upside, and we pretty much came just a fraction short of that level first thing this week. Last month's low is down here at 121.09. So there's a possibility that we're getting support down that 121.09 or close to. You can see we got support through here at the start of the month, around about the 5th of October through here. So we false broke, breaking below last month's low, came back above and became support in here. Maybe we're getting support here at the start of the week to move higher. So if we do come back down to this area, so last month's low is at 121.09, If you come down to that area again this week and it doesn't want to break down and through, you could look for your setup to buy on the lower time frame back up from the lower last month, because the lower last month can often be very good support. It can take the majority of the month to erode through it. But at the moment, for me, I'm just going to be watching up here to see if we can come back up to the high points. Last week I was watching up at 123.08 for failure, and it failed and then started to sell off Thursday down into Friday. So it might take till Thursday to get back up there and then turn around and then trade down all week. And Edwin, you're saying you're looking at the pounds a day uptrend. Well, I did say potentially it's in an uptrend. Higher top, it could be forming a higher bottom here. I'm just playing the fade in relation to that rejection candle of last week. Yeah, we've in 3 months of moving down here, we've had only half a week up here and 1 week up here in the whole trend moving down. So we haven't seen a lot of buying pressure yet. So, the weekly trend is down. It's just as to whether you want to think, are we going to see a strong uptrend form? You'll have to make that decision yourself. I'm going to be watching a retracement back inside last week's range. All right. I could be wrong. By the end of the week, this could blow all the way straight through there if that day chart trend really wants to gather some pace. But don't forget what that dollar index looked like at the end of the week, last week. Strong weekly uptrend, holding above old weekly resistance. So we'll have to see which, who wins out, the buyers or the sellers. All right, let's get into Aussie yen. All right, so I have been looking at, it never really formed perfectly for me last week. This as a potential left shoulder on the Aussie dollar day chart, head right shoulder. Now, we did form a kind of a right shoulder, but it never quite got up to the price level I was looking at. But last week's candle was a negative candle. So again, very common theme on my analysis this week is I'm just watching a retracement up inside the negative week of last week, up to the high areas of the candle. All right, so day chart is a bit mixed here. We have a lower top, higher bottom. So I'm just going to break it down to the 4-hour chart. I'm just monitoring last week's range, where we had quite an imbalance in here, so that could get filled this week. We have the job figures coming out for the Aussie on Thursday, did I say? And there's a couple of imbalances in here. The highest one is just here. So that's in this 79% area there. So I'm just going to be watching up here. It's 95.44. What happens if price gets up there? And really anticipating that we could form, that was last week's move down, rally intra-week, for then a continuation down in line with what I've been discussing before, left shoulder, head. Never got a perfect right shoulder coming in, but there's the right shoulder. All right. So then we've dropped. We're going to rally and have a continuation pattern forming within this area as we may be moving down from that right shoulder. So that's what I'm looking for. I'm just waiting to see if we can get up to 95.44. Now as well, depending on how volatile the market is when the job figures come out for the Aussie, was watching up here at 96.06 last week for the right shoulder. So this could trade up into this area this week. So that's another level to watch at 96.06. All right, if we get very volatile and we take out this high here. All right. All right, so I'm just going to put my other line in. At the moment, I'm just watching, do we come up to there and fail? Aussie dollar. Just take that off for the moment. Range bound to down. Could be putting in equal lows here at the moment. It's been below and above this weekly support or resistance area here. We closed below it last week, but we may come back above it because you can see we've been below it, back above it, below it, back above it. We could still come back above it before moving back down. And last week's candle, very negative candle. We pretty much had equal highs the last 2 weeks, finishing very negative down. We've got monthly support down here at 62.47. So, like I've been saying, suggesting on the other pairs of the dollar, I'm simply monitoring 4-hour chart. There's an imbalance up here on the 4-hour chart from last week. Simply monitoring the range from last week. There it is. And my perfect levels up here at 79% level. Looking for this imbalance to fill coming up to the 79% level. All right. Now, that's what I'm looking for that to come up to there. And then have a week down. There is a possibility, you can see today, we did get hawkish meeting minutes from the RBA. We have popped up, but we are holding below the weekly broken support levels. So over the next day or two, we might not move above what is 63.57 to 63.64. And so then this area may be the area that gets maybe tested over the next day and wants to hold here. So then look at this area to trade down from. All right. But with the job figures coming out Thursday from the Aussie, I'm just standing aside looking at the higher level. But you could certainly be watching this area too. But I always like to look at these 79% levels of the weekly range from the previous week with this imbalance in here. There's an imbalance there, and then it also, you know, the actual complete imbalance that formed last week was all the way down to about here. And then we've started to fill it. So at the moment, there's the remaining imbalance. All right, but the first imbalance on the first candle, I'm just going to back to it, is up here, just there. So we often fill the imbalance, and we haven't filled the imbalance yet. So not that this can't hold here to move down, but often we fill the imbalance. So if we're going to do that, I'd much rather be patient and wait for the higher level. All right, and Steve, yeah, I missed the pound yen. I'll get to that right now as I move across. All right, so the pound yen, we have a higher bottom on the weekly chart to a higher top up here. Well, higher bottom, higher top, higher bottom. It's just suggestive here that, you know, we can see how that weekly candle came up, but a little bit short of that weekly resistance level at 184, put in a very negative candle. We get to the dollar yen. Dollar yen's very close to 150 where intervention came in last time. So I'm not that keen on getting long these yen pairs with that in mind, because if we get another intervention and dollar yen gets to 150, all these yen pairs will decline. But the question in my mind is, if we have actually had a week down this week, so if we have, you know, we could be forming a lower top here. And if we just monitor the day chart, looking at that range there, then of course we've moved up to the high of last week. That's at the 62% level. So we could have actually moved down, 62% rally to move this way. Day chart trend is up because we've moved to a higher top. So it's a little bit tricky with that weekly candle that we had last week. And like I was suggesting on, as I'm not that keen about getting long these yen pairs with dollar yen at 150 close to. If we move to the 4-hour chart, this daily high here, 163.01. See, you know, that could be a left shoulder. that could be a left shoulder. This could be a head. We've traded down, and we could be coming up here to form a right shoulder. So, which would marry up to what I was saying on the Euro yen. Not a perfect overlap with the fibs, but 183 is your resistance level from the day chart, and 183.23 is the 79% level. So if I wanted to trade this pair, I would watch that area for as a sell zone. A buy zone area at the moment on this pair is, this is daily support, 180.77, it's last month's low. We've got monthly support at 180.41. So this area could be support this week for a move back up. So in the two areas that I'm looking at in terms of where's the buy zone or the sell zone, we're right in the middle of those two areas at the moment. So I would want to see price get to one side of the market or the other and look to trade it, around support or resistance. All right, now what I can see, if you're wanting to get really into today's market action, we do have a higher bottom to a higher top there on the 4 hour. So you could be looking at this range to the upside, pulling back. We're at the 62% area, just dropping down to the 50-minute chart. Now we're moving back above 182. So if your bias is to the long side, this could be where we're bottoming out intraday at the moment to move up for the day. Getting a bit of a trend line break, 62% retracement of yesterday's range. All right, so if you're prepared to trade it in the middle of the range based on the higher time frame, trade up to resistance up here, then this might be getting set to move up there. So what's your setup to buy? If you want to be looking to buy, maybe looking to buy the pound yen today. All right. So the day chart trend is definitely up in terms of a higher top. Problem I have with that is that weekly down candle we had last week. So some of these pairs are, especially this one in my mind, it's a little bit mixed of which way the longer term trend's moving at the moment. All right, so that's my thoughts on pound yen. Edwin, with my trendline break entry style, I look for the candle to close above. So I wait for the candle to close and I like it to close 3 to 5 pips above the trend line. So the last candle, while it traded above the trend line, it didn't close above. So this one may close above. We've still got another 10 minutes, 11 minutes to go yet. So my entry trigger, if I'm using a trendline break, is it closes 3 to 5 pips above the break. I don't normally just go on as it's breaking because you can end up with a false break. All right. Let's just hop back into the pound. Same sort of deal with the pound. If you want to trade to the upside, that's the 4 hour range at the moment. If we're trading to the upside and it's showing you 79% retracement. So we may be seeing some pound dollar, pound yen movement up today. This one, when we compare it to the pound yen, we're looking at, let's say, a trend line break. All right, it's a long way from breaking the trend line at the moment. All right, let's get into New Zealand yen. Had a nice 79% failure up here. And at the moment, if I just squash this in a little bit, we're sitting on this weekly support high to the left over here. All right, that's where we're holding at. And that's at 88.60. Now, again, a lot of my analysis this week is about what did the weekly candle do last week? And I'm just pausing because I've got another question about pound yen. So pound yen, why are you applying the fib range from low to high when the market structure is still down, or is it for the daily range of yesterday? On the 4 hour chart, I'm drawing from low to high based on the 4-hour range here. That's a higher bottom to that bottom. All right, so we've gone higher bottom to a top here. So if I'm basing my trend analysis just on the 4-hour chart, I'm drawing from higher bottom to top. All right, that's what I'm doing there. Hopefully that's clear for you, Tim. Which is the range of yesterday. So we had a candle up yesterday, and then we've been retracing back inside at yesterday's range, coming into the 62% area with the figure here, getting some form of support. So we may be having another day up today. So the 4-hour trend potentially there is up. The day trend potentially is up too, because we've moved up to a higher top before pulling back. Right, so New Zealand yen. So we had a very negative week last week. As I've been saying in some other pairs, I will be looking to the high end of the range of the week before. That overlaps with some kind of resistance. All right, now it's actually starting to trade below the this weekly area over here. It's not an area that I'd like to be selling into though. I'd much prefer this to trade back up inside the range of last week, but with the negative inflation figures from the New Zealand dollar or from the New Zealand country, it's very much on the low of the week at the moment. So at the moment for this pair, I'm wanting to see if it's going to commit below this level of support. So it'd be nice to see this have a very good close below today. And then you can look at 88.16 to be resistance intraday tomorrow. Just want to look at the 4-hour chart. So if we could have a nice break, I'm going to just draw a fib in here. If we have a break below that low, and we move down, in a perfect world like to this area, then we could trade back up to the 62% level overlapping resistance to then trade down. I'm not going to take a trade here. I don't trade breaks. I like to see things break down and then rally back up. So I'd like to see something form like that on the New Zealand yen. Or taking in just simply last week's, we haven't broken last week's low yet. So this is the range of last week. I could certainly entertain this coming back up to the 79% level and then trading down all week. All right, so a couple of things I could watch for on this pair. Does it come back up to the high end of the range where we were failing last week? That would be very much my preferred option coming up like so. So you can monitor that. Or do we break down and then rally back to 88.16? All right, Tim, asking more about pound yen. So does it then mean that based on each time frame and structure thereon, you can have fib ranges in different directions? Yeah, you can. So if I was looking at the pound yen at the moment, my first discussion was from the weekly perspective because of what we saw last week. So what I'm doing here on the pound yen is giving you a few perspectives. From the weekly charts, whilst we're at higher bottom, higher top, higher bottom, we had a significant rejection up here at that resistance area. So if we are forming a lower top here, what I was showing you there, if we looked at that range, we could be failing at the 62% level to trade down long term. All right, so that's one fib perspective, which is obviously a downtrend perspective. If we're looking at the day chart trend, we've actually moved to a higher top here. So from a day chart perspective, we could actually be drawing the opposite way and looking at the market like so, and the 62% level overlaps with the monthly support level that I was discussing at 180.41. That could be a buy zone to trade up, and that would have two factors, monthly support and the day chart fib. And on the 4-hour chart perspective, because this has a high bottom, then moving up to that top, if you're drawing a fib on the 4-hour chart, you draw it from low to high. So When I'm looking at my fibs there, we've got a potential weekly downtrends fib drawn, depending on how things map out longer term. And in the short term, you could be looking at the fibs on the day chart, the 4-hour chart in an uptrend basis. Right, and what I also drew as well was with last week's range being down, so last week's candle was down. So I'm just drawing in last week's candle. We could simply trade back up inside the range of last week's candle before moving down this week. So we could also look at the range from last week's high to low. I'm more in favor of looking at this range because of just last week's candle, which was negative. Rejecting just short of weekly resistance up here. So I'd be more inclined just to sit on my hands and see whether or not price can trade up to this 62 to 79% area with your day chart resistance over here. This area that I've highlighted here, that's probably my preferred area to look for a short. As I referenced before, with dollar yen being very close to 150 and getting close to intervention levels, I'm really not that fussed about getting long, but of course, looking at the 4-hour charts range, there may be the potential to get long if you wanted to, if that's your perspective. Or my perspective is more, I think, waiting to see if this can get up to here and looking for an opportunity to short, if that can come around the corner. All right, hopefully it helps. And Tim is saying, for example, daytime frame showing up with market structure and fib range from low to high, while 4 hours showing, I think the 4 hours more uptrend than downtrend. It's showing you a higher bottom to the last bottom before the next highest form. So in my mind, that's more uptrend than downtrend. Yeah, if I just get rid of this fib here. Putting this bottom on the 4-hour chart, came up to this little top here, came down to put in this bottom here. That's a higher bottom to there, and then we moved up to that high. So in my mind, it's more of an uptrend than a downtrend. All right, that's my interpretation anyway. All right, we can go to the New Zealand dollar now. So New Zealand dollar is looking very weak, but it is trading into an area of support. We've kind of got this double top forming up here from last week. I did discuss about trading the break of the candle low last week with that double top. Of course, we'd have to take a trade and be standing in front of the US inflation figures, but I'm going to look at this as a double top. Hasn't been able to even get up to 38% level of this large range. And really what it's doing, this low here is a monthly low to the monthly chart. Not wanting to get above that area with any conviction through the course of the month. So just want to know where I'm getting this line from here. I think it's from the day chart. Yeah, there's a day chart low over there. I just want to know where I was referencing that from. So at the moment, we're trading into a lot of day chart support lows through here. But I think what I'll be looking at is the possibility of this being a double top up here and coming up with a price projection for that double top. So the double top price projection comes in at 56.92. That's the high of the pattern, projected below this low. Now we're very much at this low or very close to, and I wouldn't want to trade into that low because there's not a lot of room left. This could be support. There's lows to the left here that can be support. So what I'd like to see, and I don't really need that line on there at the moment, because what I would like to see is we get a clear move below 58.70 with a daily candle, and that shows a very comfortable break, and then watch for price to rally back to the level to be resistance for then a move down. So at the moment, waiting to see if we break the midpoint to really confirm this double top. So looking for a nice move below. And then a rally back to that level to be resistance intraday. Now, what else could happen this week is this level just holds. 58.70 holds, and we want to move back up the range. We want to stay range bound. CPI, I don't know if they call it CPI in New Zealand. Let me just double check. Today's, yeah, it's CPI QQ from New Zealand. It is moving down. You know, the US wants their inflation to be at annually 2%. Here, quarterly from New Zealand is at 1.8%, moving down from 1.9%. All right, so if this keeps ticking down, it's going to be weak for New Zealand. So with that in mind, we may well see a breakdown through this area, but for sure 58.70 could be support. So that is really the level to watch. Do we hold at 58.70 to trade back up, or do we break and become resistance? With the pattern, I'll be watching for a break in line with that US dollar strength that we've been seeing as well. All right. All right, we couldn't get down to the level I was looking at last week, which is only a minor day support level there, but we couldn't get down there. And we have inflation figures at the moment coming out later in the day. So this is a bit dangerous to trade this pair at the moment, but from a weekly chart perspective, it's in an uptrend. Just going to drag that over the weekly range. And there's maybe some more time to trade back down the range a little bit. We haven't pulled back to the 62% level yet, or the 79% level. And the thing with this pair as well, is we're in a weekly uptrend looking for a pullback maybe within that trend. So Tim, this is where you can have fibs in opposition. So we have a weekly uptrend, but we have a monthly downtrend here. So we're down, rallying. Are we failing at the 79% level for long term? Or are we moving? Are we going to move through that area long term? And then from the weekly perspective, we have an uptrend. So from the weekly perspective, we're just trading back inside this range before moving higher. So let's just go to the day chart. So it is a bit tricky because what I can see is, you know, when we did have a rally back up last week, where did we stop? At the 79% level as well. I squash this in. Lots of there's weekly resistance over here. There's daily resistance here too. So we're really struggling at the close enough. It's the 137 level at the moment. So it needs some very strong data to break through the 137 level at the moment. And there's a number of things buoying or hitting the dollar CAD at the moment, and that is with the war in Israel. Oil is going up in price, which from a dollar CAD perspective is negative for the dollar CAD. It actually makes the Canadian get stronger. So there's that to think about. And then you've got the Canadian inflation figures coming out today. So depending on what those figures do, so we have strong oil. If we get strong inflation figures from Canada, then we could see this moving down and failing at this very strong monthly level up here. The monthly 79% level. All right. So it's very difficult to work out, for me personally, which way are we going long term at the moment. Often when you have a mix of trends, usually support or resistance will prevail. So where's the strong level of resistance at the moment? It's up here, 136.94. So this resistance at the moment is prevailing. We try to move above and we false broke. Came back up and formed some form of left shoulder head, right shoulder maybe. Are we moving back down towards daily support at 134.89? So, you know, if the dollar CAD was the only pair I could trade at the moment, because really it's in the middle of this range too, from low to high, I'd probably leave it alone. But if I had to make a choice, I would probably be sitting on my hands waiting to see if we come back up to 136.94, the 137 level, and do we once more fail up there? Because that's a very strong level of resistance that the market seemingly doesn't want to. It can't. It's been above it, but it can't hold above it. So, you know, quite clear the sellers are up there at that level at the moment. All right. And if we are going to have further strength on oil, that's positive for the Canadian side as well. So that's my thoughts on dollar CAD at the moment. Dollar franc, this is actually breaking down. So I know, Charles, I think it was you saying about the euro dollars maybe getting into an uptrend. Dollar franc's definitely forming a downtrend here. It wasn't able to rally back up to the level I was watching last week. And we are maybe being able to hold. We'll have to wait and see how the monthly candle finishes, but we have a lower top to lower bottom. Are we putting in a reversal month this month to maybe move down into November on the dollar franc? All right. Now the weekly trend is up, but it's failing at this clear level. And the day chart is actually putting in a lower top. So we have a lower bottom, lower top scenario here. So it's just asking itself today, does it want to hold below this area here at 90.16? So that's a very potential strong level of resistance at the moment for the dollar franc. So you could be certainly watching 90.16. So let's drop to the 15-minute chart. But we have actually moved above it today. So if 90.16 is going to be resistance to hold this pair down, you really want to see this. You don't want to be seeing it above, pulling back to that line. You want to see it breaking below and then using a rally back to that level to trade down. All right. So we're trying to hold the bias for the day chart trend that we're seeing on the dollar franc there. Selling side's the bias. And can we get back below 90.16? Can it become resistance? All right. Dollar yen. Really, it's the same commentary that I had last week on the dollar yen. And Marin, you're asking me, W2I, do you watch future contracts or oil? To be perfectly honest, I don't trade oil. I just have it there so I know what it's doing. So I neither trade it in the futures market or a CFD market. I guess if I wanted to trade it, I guess a futures, a CFD market's maybe better than a futures market because you don't have to worry about moving from one contract to another. And you're asking me what contract are we in? I don't know what contract we are in, I have to be honest, because I don't follow it that closely. I really just have the chart there to watch what the price is and what the trends are rather than trade it personally. So you would have to go to the website of the exchange and you'll be able to find it that way. Because I'm pretty sure in the platform here that this, I don't believe this is a futures contract. I believe this is a CFD contract, a CFD product that you can trade. So I don't believe you have to worry about this rolling. But before trading it, I would check with an account manager, ACY. All right, dollar yen. So with the dollar yen, I'm just watching last month's high up here, which we're holding at 149.70 up to the 150 level. If we start to get above 150, I'd be watching for reversal, because that's where we had the intervention. All right. So, and to be perfectly honest, to me, dollar yen at the moment, I'm not that fussed about trading. I'd rather trade another pair to the yen to the short side rather than the dollar yen, because dollar yen from a purely fundamental perspective is bullish because of the interest rate differential on the dollar side. Yet the Bank of Japan seemingly doesn't want to let it move above 150. So it's not a big flavor of the month for me at the moment to trade. If this started to have, this is the 4-hour chart we're looking at here, but if this started to show a nice breakdown in trend, maybe to the downside, I could then start to get excited about how structure started to form. Because at the moment, this is actually showing you an uptrend on the daily chart, showing you an uptrend on the weekly chart, and it's in an uptrend on the monthly chart. From the pure fundamental perspective of the interest rate differential favoring the US and the interest on the yen side being very, very low. Then you've got of course, the Bank of Japan not liking this above 150. So I would much prefer to see a clear breakdown to the downside, whether that was we get a shift in the fundamental picture, or we simply get the Bank of Japan really coming in and wanting to intervene strongly in keeping this in a downtrend. So I will just be watching at the moment. Back to the 4-hour chart. Last month's high is 149.70. I did see someone on LinkedIn today trading options on this, shorting it at 150 or close to. But there was the intervention back in early October, and all we've done is just move back to that level, which in itself tells you that sellers are quite clearly sitting there, holding it there, not wanting to, the buyers aren't wanting to move it above that level, because as soon as we moved above that level last time, it just collapsed from intervention. So tricky one at the moment. It would be just nice to see some nice price action starting to break to the downside, and then you could just look to sell a rally. But you can see there for the best part of majority of a week there, it's just been holding up there in a range. So, I mean, if you wanted to get, I just wanted to drop it down to a lower time frame. If you wanted to get really aggressive and adventurous, you could look at, the 79% level of that movement down yesterday, rolling back up to last month's high. There's a 79% level there as well at 149.69. So you could be selling it here, just stop above yesterday's high. It's a very limited risk for maybe a potentially high downside move if one came around. You just have to work out how you want to, do you want to trade the dollar yen and how you want to structure things. All right, just finish off, I'll have a quick look at gold, which has been moving up. Now, I just want to go to my weekly chart. So we do have, I'm just getting rid of that fib. I know we've had a very strong move up, but it's still holding its trend, both in lower top to lower bottom. And if I wanted to do a trend line, it's really just come back to where the sell zone is. Of course, it's been moving up there because of the Israeli war that's happening. All right, but if you're long, I just want to zoom that out a bit, or I'll redraw my trend line. Now the weekly trend is still remaining down. Very strong rally up there on the day chart. In fact, on the day chart, we're still in a downtrend because that's a lower top to bottom. That's just coming back up. But I'm going to use the weekly range for the fib. And you can see we're just sticking at the 79% level of that range. And if we were to drift up a little bit higher, trend line resistance here too. So hopefully it's obvious. There we go. We're definitely at resistance up here in the sell zone. It's just how the market's reacting to the, the issues in Israel. Is the market going to further react and just break through resistance, or are we in a sell zone to sell? I guess when you're dealing with a market like gold at the moment, with the environment that we're in, it is highly risky, because I know the president of the US is going to Israel over the next few days. That's either going to heighten things or squash things. Probably maybe more heighten things, because I think the US are on the Israeli side. So, but things can change very quickly when we're dealing with a war. If suddenly there's a ceasefire, an intervention, then this potentially would move back down. So, getting long here probably wouldn't be the best idea. So we can notice, though, if we are getting long this pair because of war, maybe it needs a pullback. There's a couple of imbalances in here, notably the last one from Friday. Maybe we need to pull back to this area that we moved above. So 188.84 to 180.92. Maybe we need to pull back to old weekly resistance to be supports. Look at that area just there for an opportunity to get long, if that's your mode of operation in the current environment, to move up and then through that area. Personally, for me on gold, I think it's highly volatile. Of course, if you're in the right way, when the volatility hits, you're making money. But if you're not, you could be losing a lot of money. So you have to weigh up the pros and cons of the risk when you're dealing with gold at the moment. All right, got a few things coming in. Tim, you just talking about dollar yen. So you're asking me about the dollar yen. So you're saying, I guess there's a clear example of fib range in different directions based on perspective. You currently have the fib range from high to low since the yen intervention, whereas the major fib range is from low to high. How does one avoid confusion? Well, you have to decide what your perspective is. For me, 150 is the ceiling. Okay, so I would look to try to formulate a rally point using a fib. Whereas if you think we're going to 155, so if you move back to dollar yen, as I'm talking, it's starting to sell off just ahead of that level. For me, 150 is pretty much the roof. So I'm looking for, if I wanted to trade, I'd be trying to structure, looking for where prices declines and then looking for rally points. Because I don't want to get long and trade above 150 or through 150. Whereas from a day chart perspective, if you want to get long, your fib range would be that way. So first of all, you have to look at what your perspective is relative to the information that you're analyzing. For me, if I was purely just doing trend, I would be drawing it that way. Whereas I'm also looking at, a central bank's information that at 150 they're wanting to intervene. So then I have to apply my technical analysis based on what I think's going to happen. What I have to think about is, what do I think is the stronger outcome and the higher probability thing that's happening on the dollar yen at the moment. So that's how I'm drawing my fibs, rather than just purely drawing them relative to what the trend is. All right, so how do you avoid confusion? Some of it's experience. All right, my experience is at 150, the central bank's going to intervene. So I don't want to look at getting long into anywhere near 150. Now you could be looking at, if I drop down to the 4-hour chart and we're looking at this daily chart range here that I've drawn in. If you think we're moving at long term, 62% levels down here, it overlaps with a high point that we've moved above at 148.84. We could simply trade down to this level, and that can be a buying level then to trade up from. And that would be round about, 148.84. So round about the 149 level, you're 100 pips away from 150. So if you're comfortable with that, you could be drawing your fibs that way and looking to move up that way. Depends which way you're comfortable trading in sometimes. All right. So I'm just going to leave my smaller fib there on the 15-minute chart, and we'll see how that goes. And as you're saying, gold is raising or rising as dollar is. Yep, US dollar's been rising and so is gold. But of course, gold's rising in the face of what's happening in Israel, isn't it? So there's a flight to putting money into gold as well. You know, when we have, and of course as well, you know, money's potentially moving into the US dollar as well. So, and you know, one reason as well maybe why the dollar franc is a little bit against the face of what we're seeing on some of the other pairs to the US dollar. You know, this is dollar franc's moving down, so the franc gaining is, whilst we're seeing the US dollar gain, what we have been seeing is that the US dollar franc's been moving down because this, most definitely the Swiss franc's being used as a safe haven currency in the world at the moment, because we now have two areas of the world at war. So that's maybe why we're also seeing the dollar franc going a little bit in opposition to what we saw. You know, if I show you the weekly chart here, dollar franc moved down last week. Now this usually goes the opposite way to the euro dollar, but the euro dollar went down last week, the pound dollar went down last week, and the dollar franc went down last week because money's flowing into the franc because it's a safe haven currency. All right. So, yep, dollar's going up because that's also, you know, money flows into that when we have these issues as well. Money flows into gold, money flows into the Swiss franc. So that's when we start to see maybe a little mix of correlation because of what's going on. All right, so at the moment, you know, today's analysis, I'm just watching for price to get to some of the key levels that the price can get to. Some of the levels I was watching last week, it took till Thursday for price action to get to those levels before they started to turn around, and then just traded down Thursday, Friday into the low of the week. So sometimes it's a patience game. And, you know, it's worth being aware that, yes, the US president's going to Israel this week. That to me doesn't seem like a very good idea for the president of the US to go to Israel, because what happens if the side that's been bombing Israel starts to bomb Israel again and is sitting in the middle of Israel? That doesn't seem like a bright idea to me. But anyway, so we don't know what volatility could come out from him visiting there whenever he gets there. So, you know, when it's very volatile or very uncertain, you don't have to do anything. That's why, you know, I've got my levels drawn in, and I just want to see what the euro dollar is doing. I've got my levels drawn in. I'm just waiting for price action to come to me, and I want to see where the price starts to turn around at the levels that I'm watching. All right, so I'll leave you with the levels that I'm watching. Tomorrow I'm going to be taking you through, if you've got the time on the webinar front, taking you through trading the 79% fib retracement pattern. I've actually shown you a few of those today, but I'll be taking you through that as a lesson tomorrow at 8 p.m. Sydney time, if you've got the time. All right, so if you've got the time, just come over and register your interest, and I look forward to seeing you then. All right, thanks everybody.